Hello, I'm David Crowell from Mortgage Network, and this is Money Matters. Today I'm going to talk about several scenarios, financing scenarios, life challenge scenarios that I see commonly here in the Low Country. As you know, Mortgage Network is the largest provider of home mortgages in this part of the world. In the Beaufort County, we are far and away the largest provider of mortgages, and we have offices, some 40 offices now, from South Carolina all the way up to Maine, all the way up the eastern seaboard. We have 6 offices here in South Carolina. But in the in Hilton Head, Bluffton, and surrounding communities, we see by far the largest share of people seeking financing to purchase homes, sell homes, rearrange their lives in various ways. So today I'm going to pick out 3 or 4 of the scenarios that I think would be interesting to you, and in future weeks I'm going to do the same thing. I'm going to pick out scenarios that have occurred in recent experience that I think you would be interested in. Of course, I'll be dropping any names, dates, and places. So, the first scenario that's quite common is what do you do when you come to retirement age and you are 65 years old, or 60 years old, 65 years old, 70 years old, 75 years old, and you no longer have a full-time job, you no longer have W-2 compensation, you're retired. The income stream coming into your household is perhaps a small pension, Social Security, husband and wife, a little bit of interest and dividends from investments, but nowhere near enough to be a qualified borrower of, for example, a home, the money to purchase a home in Hampton Lake. Let's say that you have retired, you wish to borrow $450,000 to buy a home in Hampton Lake. You've got a good bit of money from the sale of your house in Massachusetts. You've got a nice chunk of money in the bank. The new home is $600,000. You're perfectly willing to put $150,000 down. But how can you possibly qualify to borrow $450,000? This is a common problem. The problem is even intensified when the house in Massachusetts hasn't yet sold, and it's going to, but it hasn't quite sold, and you just found the perfect house in Hampton Lake, that same $600,000 house. In both cases, you really got a struggle on your hands to financially qualify for the money because you have no job any longer. You have clearly insufficient income. What is done almost universally now in these scenarios is we look at your retirement assets. This is the assumption here, is that you are 59 and a half years old or older. We look at your retirement assets. We look at your IRA, your Roth IRA, 401k if one still exists and hasn't been yet converted. We look at the so-called qualified assets or retirement assets, and we set up a distribution with your account manager at Schwab or at Ameritrade or at Ameriprise or at Fidelity. We give you the number that you need as a distribution against your qualified asset account. Let's say that the additional income that you need is $5,000 a month. Well, we do all the calculations, make certain that specifically an additional $5,000 a month will do the trick for you. And lay out the groundwork. You contact your representative at Fidelity and you say, George, I'd like to set up a distribution, a recurring monthly distribution for $5,000. You go ahead and do that. It takes a day or two. It's very, very simply done. And the first of the distributions from your IRA hits your bank account. You qualify for the mortgage, and your missing income, because you retired, has been temporarily replaced by a recurring monthly distribution. Now, the elegance of this is that the recurring monthly distribution can be canceled after the transaction is completed or altered in any way that you like at any time. So you're not committed to continuing to take the distribution and to continue to have to pay tax on money coming out of the IRA sooner or quicker than you might have wanted. You can alter it literally the very next month. You can say, back on the phone with George, George, I'd really like that distribution not to be $5,000 a month. I think $2,000 a month would do us just fine, whatever the case may be. But what this scenario and all of the scenarios embedded in it is meant to demonstrate to you is that the mortgage banking industry has begun to successfully address one of the worries, one of the problems that has been facing retiring baby boomers for some number of years now. You see, the previous generation, my father's generation, and the generations coming immediately after him, post-war generation, they all retired with pensions, or the vast majority of them retired with pensions. So their ability to successfully be creditworthy and to be borrowers late into their lives was not an issue. They had Social Security, they also had pensions. It's the baby boom that's brought this issue into focus. The baby boom, people like myself who are 55 to 70 years old, are now retiring, and they are retiring largely without pensions. So household income is comprised of a lump of money in investment accounts and Social Security. So there's the investment account is taking the place of what used to be the pension cash flow. And this has created an awkwardness for a bunch of years, the last 5 or 6 or 7 years, that the mortgage banking industry has finally found ways to address. So I'm giving you a piece of good news here. If it comes up in conversation, cocktail parties, sitting around with friends, just get in touch. Mortgage Network, David Crowell, Sam Cavanaugh, Brian Newman, Susan Smith, Tori Glass, Stephen Page. There's a bunch of us. We're absolutely up to date, absolutely skilled in helping senior borrowers to be as financially flexible as if they were 22 years old. So that's a pretty good fountain of youth, Ponce de Leon trick. The financing business is sufficiently up to date so that seniors really need not worry. Another question that often comes up, which is a bit of a chuckle, came up this last week. I had an 82-year-old borrower call and ask what was the maximum amount that we would of time we would be able to lend for him. And I said, a 30-year mortgage. And he said, well, that's absurd. I'm not going to live to 110 years old. And I explained that we are age blind. So that little scenario, I hope it's been useful to you, and I look forward to seeing you on the next show. This is David Crowell of Mortgage Network, signing off on Money Matters.